Hello again from Tinderbox. You might have watched our previous video on being a sole trader. In this video we're going to talk about being a limited company. A limited company is much more onerous. Having a limited company is much more onerous than being a sole trader, but it's the most tax efficient way to operate. And if you're going to be earning more than £40,000, maybe in your second or third year of trading when you're up to that level, then it's definitely the best way to operate, but it does come with a bit more administration. One of the key things about a limited company is that you have to incorporate that company at Companies House. It's more complicated than it sounds, but there are many people out there that can help you with that. There are company formation agents you can find on the web, or of course Freelance World will be more than happy to help with that. It can cost you up to £200, so be careful. But Freelance will be able to incorporate a company for you for about £50, including VAT. And that company will be up and running and ready for you to operate within 24 hours. So pretty quick. Key features of a limited company are that you're three different people when you have a limited company. You're a shareholder or an owner of that company. You're a director of that company, and that brings different responsibilities. And you'll be an employee of your company. So you're actually three different people when you have a limited company, three different hats to wear, three different sets of responsibility. One of the fundamental differences with a limited company and a sole trader is that as a limited company you need your own bank account, you need a business bank account, and that can take up to 2 weeks, perhaps sometimes even 3 I've seen, to get set up under current banking regulations, so be aware of that. You can't just start up a limited company and have a bank account the next day. You also need insurance. You've got a legal responsibility to have employers and public liability insurance. Even if you've got no employees, you have to have that under UK law. And you also have to register as an employer with HMRC for PAYE and national insurance. Again, even if you've got no employees, it's something that you need to do. When it comes to taxes, there's different taxes with a limited company than there are as a sole trader. The first thing is that the company will pay tax on its profits. That's called corporation tax. If you're an employee of the company, you take a salary out, then you're going to pay tax on that salary. You pay what's called PAYE tax and national insurance, just as you would if you worked for somebody else. And the third kind of tax you might have within a limited company is on dividends. Dividends, if you've watched one of our other videos, are a mechanism for you to take profit out of the company. Those dividends come out after you've paid the corporation tax, so unless you're taking out more earnings than about £40,000, you're not going to have any more tax to pay. If you take more than £40,000, you're into the higher rate tax threshold, and you will have more tax to pay. Annual returns are something that people struggle to understand with a limited company. When you're a sole trader, all you've got to do is a self-assessment tax return once a year. With a limited company, there are a number of different returns. The first one, which is called an annual return, is a return you've got to submit with Companies House, which is all to do with the ownership and the administration of the company, any changes in the registered office or the directors. The second thing you have to submit once a year is what's called the annual report and accounts, and that is the accounts for your business. They have to be prepared in a certain format that's defined in the Companies Act. They look a bit cumbersome, they can be a bit scary for people that aren't accountants. But of course at Freelance World we work really closely with our clients and help them understand those accounts. So you've got to prepare an annual report and accounts. Along with those annual report and accounts, which you'll send to Companies House, and you also send to Inland Revenue or HMRC, you have to prepare what's called a CT 600 corporation tax return. And that is the tax return that calculates how much tax is due based on the profits of the company. And that has to be submitted to HMRC within 9 months of the end of the year, and your tax has to be paid then as well. Another return that you have as a limited company or as an employer is what's called a P35 annual return, and that is a summary of all the taxes that you've collected from your employees over the course of that tax year, 6th of April to 5th of April, and that's generally due by about the 19th of May every year. And one other return that you might have to prepare with your limited company is called a P11D, and that return would be submitted to Companies House if, as a director of the company, you've earned more than £8,500 or you've received a number of different benefits from the company, such as a company car or maybe some expenses. And then the final thing you would have as a director and a shareholder of your business is a self-assessment tax return, which is the only return you would have if you were a sole trader. As a director of a company, you've got an obligation to submit a self-assessment tax return as well, and that will document the income you've had from your company, both in salary and dividends and any other private income that you have as well. So as you can see, there's an awful lot more to running a limited company. If you're thinking about setting up a limited company, or you're currently a sole trader and would like to move into a limited company because your business is growing and developing, the best thing you can do is give us a call at Freelance World. Come in, speak to the team, and we'll be able to help you with everything that you need to do. It's nothing to be afraid of. And that's a limited company. Thanks. Goodbye.